M5 entries. Now, this came from the previous report and the previous week, yeah. So first of all is the dollar Swiss. It gave two values, 89.50, 89.80, and you can see that the price reacted to the lower end of the 89.50 area, and you can see that that impulsive price coming down, breaking this swing over here. So that created these two gaps here, right? So what we are looking for price to move back up and then for you to sell it. So even you have sold it here at the 50%, you could see that this was your risk. This entire place was your risk, and the reward is just tremendous right over here. So that dollar Swiss, we've caught it. Congrats to you. Now, next one was the pound dollar, and we were looking at the 1.275 for bearish price section, right? First of all, now this is a very, very important thing that I want you all to look at, especially when the prices are a bit tricky and you want to be really, really careful. Now, this was the swing. The swing, you can see that price went up here and then came down and moved up. So this was a consolidation, very, very clear consolidation zone, right? This thing right away, it was like that. Now, there are a few things that I want you to focus upon. Number one, that I have also shared with you that all these areas, these gaps like this, they attract prices, right? They attract prices there to fuel them before, if they want to come down, they have to come to this area first before they come down again, correct? So the same thing over here. If you want to focus on price coming down, you also need to focus on the other areas when price move up. So what you can see from here is that at this particular area, there is this gap right over here. So this gap also acted as a support area for price coming down. So when you have prices coming down and unable, after filling this gap right over here, they show a strong rejection of that area. It could also mean that price could actually move the other way around. Okay, so it's always good whenever you want to do sell, you just need to double check, are there any significant levels to be filled and could act as a support and move the other way around or not. So what you can do, you can go to the M5 or the M15 to double check. So this is something extra you need to know before you take the trade. Okay, so having said that thing right over there, what you can do is that, here, basically what happened is that if you have sold, it will have taken you out, you have hit your stop loss right over here. It's fine, okay, because this particular thing you're not familiar as yet, no problem. But then we look into the subsequent price action. So let's just say, for argument's sake, because you don't know this, you don't have this knowledge, this was a losing trade, you lost over here, it's fine. Now here, price retests this zone again, all right, in the future. Now after retesting, it came down, didn't do anything. One more time, you can see impulse price moving down from over here, right? So what happened is this. Now we mark those other areas. Now this place has been filled, but there's another place down here that hasn't been filled. So what I also mean is that this area are potential areas that price could hit here and start moving up. Doesn't mean for sure it's going to go, but you have to be a bit careful. So let's say this was your swing, right? And that you're always swing low. So what you can see here is price came down right over here. After coming down right over here, it started moving backwards. So if you want to take a trade, you don't take it right over here, because look, this was your stop loss point. this is your entry point. So if you do an entry from over here, would this make sense to you? No, it does not make sense, because you know that number one, it did not come into this area yet, so probably it will still touch. But if I were to sell it right over here, what I'm just making this much, but if I lose, I'm going to lose this much. Now, if you don't have a good understanding about price action and you take this kind of trades, then I think it's not advisable, because you need a couple of wins under your belt just to break even, and that's not a point. But if you have a very strong accuracy, that's a different case. Like 10 trades, you only lose once, then no problem. I don't see any problem why you don't take that. But you need to practice until it comes to a point where out of 10 trades, you win 9, or even 9 trades. Then that's a different case. You can from time to time take this kind of risk and say, yeah, money in my pocket, I'm fine, kind of thing. That can happen, because I've seen some traders do that. Okay, but if not, then this is better. Wait for price to go in. So probably what you do instead is to put a pending order right over here at the very least. So if it hits here, this is your target. It's at least 1-to-1. Okay, so if you reach 10, you win 10. So it's fine that way. Or if you reach 1%, you make 1%. It's fine. At least that we know it's at break even and it's much better. Okay, so you can look into that. Now, because first thing first, this area has no gaps. You know very well this thing can come down until this particular area over here. So if you take anything, when it comes down, it will move down slowly, and because there are no gaps in between here nor here, price can just come down until it hit and close this gap. So you see, the moment it closed this gap, it tried to move up again. And came down, second round is hovering right over here. Okay, so yes, it can come down more after that, but the thing is that, have you done enough backtest to understand this price action, what it can do? So if this thing don't, like I said, look into M5, look into M15 to look for these gaps, study them. Okay, so if you're looking for sell, support areas can be the buy gaps. So this is something that you need to take into consideration. It's very, very important over there. Okay, so that's one. Next is the pound dollar. This you can see from over here. Now this was that move down, right? And then what happened next was that this was the full entry of it. How I would have taken the trade on the M15, M5, sorry. First movement, correction, second movement. Now this second movement happened way before this swing, right? So that's criteria number one. So if you have, then it would have created gaps right over here, created gaps right over here, created gaps right over here. Now these are all the gaps that you could potentially enter. Now, where do you enter? Where do you enter? Where you decide you enter is an area that gives you nice risk and reward, R and R. So it's okay to miss trade if you want a good risk and reward. It's fine. Okay, so if you think this is where it I want, here is definitely chances of filling it is the highest, because it's the lowest gap right over here. But then would this give you your 1-to-1? You have to go and check. Here, yes, you will get your 1-to-1. And then here, if trades are taken here, you will also get 2-to-1. You risk 1, you make 2 instead. So you need to make this kind of decision when you start trading. Okay. So like I said, it's okay to miss trade if you want good risk and reward. If you want to focus on accuracy, not much on the risk reward, it's also fine. You see what works best for you. But like I said, you need to have very high accuracy if you want to take in targets that is less, much less than your risk. Okay, so hopefully this sharing can let you understand, how to deal with this. Yeah, the trade that just happened. Now this one was sent in to me. Question first. This is the goal, right? And there was a marking here saying that this was the swing that you're looking at, right? First of all, I would like to say that this particular swing that you chose there is an aggressive type of swing. It's not wrong. I have to let you know that it's not wrong. If you've done enough homework, it's not wrong to look into there, but I would categorize it as something very aggressive. I would prefer to look more into this area as a swing. That means it moved up, come down, and then move up again. So I would prefer to use this area as my initial swing. So first thing first, price came down, move up, down again to break over here, move up. Now, number one, this will be on the M5. This would be your third swing, third movement already from there. So you will need to, for you to take this, you still can. I'm not saying you cannot. You still can. But you need to know how significant is this place in giving you that potential movement down again. But anyway, if you have money management, no problem. I don't mind you taking this entries, this risk, you know best, right? So looking at this whole entry over here, whereby this, if I use this as my swing, then these are all the gaps that I've just marked over here. These are my gaps, right? So these are my gaps. So the nearest is this. So if you see that you must have candle 1, candle 2, candle 3, and in between they form the gap, this blue line here. So your entry effectively would be the top of this candle right over here, right? This will be your entry. Now, if you take an entry over here, and let's say you put a stop loss here or here, you will need to go and decide, until the next level, is this a good risk and reward? If yes, by all means, because I did say one thing, okay? If you remember, price push hard from that area. This is something that you need to see. So if you see that price pushing down hard, then you got it right already. You know that this momentum can continue, because I mentioned that. And also I mentioned in some of the price action that I see, I will need to see a strong push down, right? I did say that too. So these are the things that you need to know, whether it's important or not to take that area, how significant it is. So if it is, then by all means, you go for it, okay? Because also the next thing you need to decide whether you want to take it so far away is this. Remember when I first talked to you all about this entry system? This was your H1 entry. Now, apart from the M5, M15, in the past, I've also talked about H1 entries, right? Then you can see that the moment they make a high, this was the H1 entry and you would have lost right over here. And then only here, you start making again. So this is one of those things that you need to deal with H1 entries. Sometimes they may not move straight away. They move on later. So you would need to hold on to the trade, then only you can have a good return. So the question here now is that this was, if H1, this was the entry, then you have to ask the question, how far is this down here? And does it make sense or not? So you have to make this decision right over here. Like for example, this would be the gap, right? So practically your first target is to fill this area first, right? So is this a good entry for you to enter right over here if this is your M5 entry? So you need to ask yourself, or better to wait for it to move up before it moves down if you did not catch it much earlier over here. So if, for example, your entry is over here, okay, I don't mind, because price has to come down to at least here first. By that time it comes down to this level here and here, I would have made my 1-to-1, then no problem, I can take this risk. But if it's too near, like say somewhere around here, I might not take it already. So hopefully this explanation can help you. At the end of the day, like I said, you need the experience, and only experience can give you that understanding, should I continue with this trade or not? Okay. So yeah, I did not see any questions coming in for today. You're letting me off the hook, no problem. I thank you for that. I will write the report and send it all to you all in a short while together with the videos of this. So with that, I wish everybody a wonderful evening, and I'll talk to you all in my next video on Wednesday then. Thank you. Good night.